what's up? It's me, Haley Jones, and it is Finance Friday. So I'm a real estate agent based out of Knoxville, Tennessee.
And I'm Shay Martin. I'm a mortgage loan originator, also here in Knoxville, Tennessee.
And today, on this week's Finance Friday, we are talking FHA loans. I know you've been wondering what they are. You can't sleep because you have so many questions about FHA loans. So we're going to talk about them. So Shay, talk to us about FHA. Who are they good for? Kind of what are the basics we need to know?
Yeah, so FHA is traditionally what people have always kind of thought of like the first time home buyer loan. So if you're going out and you don't have to be a first time home buyer, let me just say that, but it is a great loan program for someone who doesn't have a large down payment, who might be establishing credit or reestablishing credit or possibly have some previous credit things. So it's more lenient on credit. Rates are great on the FHA loan. So it's just geared towards someone who might not have as much skin to put in the game and things like that, or have some previous credit things that they're working through. It'll let us go a little bit higher on debt to income ratios. So like I said, it's a little bit more lenient. We can push the limits a little bit more on FHA. And so it's a great program for somebody who might not be that, perfect, excellent credit borrower.
Got it. And I think of it as it's a great option for somebody who may not have a ton of cash for down payment. So that when I think of FHA, that's what I kind of think of. But
yeah, because the down payment, and I think we've talked about this, in previous episodes, but the down payment requirement on the FHA loan is just 3.5% of the purchase price. That's just your down payment. There's obviously closing costs and things like that also. But the down payment is just 3.5% of the purchase price. So you don't have to have a huge amount of money to put down. So it's a great option for someone who has a little bit of a down payment, but not a significant amount.
And with FHA, talk to us about, are there fees involved in terms of like mortgage insurance? Like, what does that look like?
Yeah, so like we've talked about with all loan programs, if you don't have a 20% down payment, there is some form of mortgage insurance. FHA is very similar to the USDA loan that we've previously talked about. FHA charges an upfront or a single premium mortgage insurance that's financed into the loan over the life of the loan, so 15, 20, 30 years, however long your loan term is. And then they also do have a monthly mortgage insurance that you would pay monthly. One of the big things on an FHA loan that is different from a conventional loan is that mortgage insurance is for the life of the loan. So you will pay that as long as you have that FHA loan. It doesn't fall off, and we'll talk about conventional another week or another day, but it doesn't fall off once you reach a certain percentage of equity.
Got it. So you're gonna have that payment throughout the life of the loan.
Right. What's nice though about mortgage insurance on the FHA loan is it's a flat factor. So it's a flat amount. It's a percentage of your loan amount, but the factor they charge does not change based on credit score or different things like that. So even if you have the minimum credit score of a 620, which is our minimum credit score for right now for FHA loans, that factor is not going to be any higher than if you have a 720 credit score. It's nice that it's not, and again, with the interest rate and things like that, the rate, you don't see as much of an adjustment on the rate for credit score. So that's what we talked about with leniency on credit. If your credit score is, below 700 or so, then FHA tends to be the better payment option because rate and that mortgage insurance are going to be lower than on like a conventional loan.
Got it. And so just to clarify again, that FHA is not just for first-time home buyers. That
Correct.
you could have had an FHA loan before, and then you could have another FHA loan or whatever.
Yeah. So one thing I do want to mention on FHA, one of their requirements is they do not allow you to have two FHA loans. There are some exceptions, so don't let me, I'm not going to make a blanket statement on that. But for the most part, they will not allow you to have two FHA loans. So if you have a current FHA loan and you're looking to buy another house, you would have to sell that house simultaneously and not have two FHA loans open. So if you have a current FHA loan and you're looking at another option, we might have to look at a conventional option for you or something else. So that is one thing about FHA. They won't let you have two FHA loans at one time.
And FHA is strictly for, and you may have said this, if you did, forgive me, but it's strictly for you're going to live in the house. Is that correct?
Correct. Yes. So they will allow like a non-occupying co-borrower. So like if I wanted to buy a house and my mom was going to co-sign or be a co-borrower that wasn't going to live there, that's allowed, but it's not for an investment. So it is a primary residence loan.
Got it.
So somebody has to occupy that house.
So not for like your Airbnb or a rental
Yes.
house or anything like that. It would be
Correct.
something that you are living in. Okay.
Correct.
Cool.
One of the things I want to mention, so on a FHA loan, the max loan limit right now, so this is a nationwide loan limit, is $356,000 and some change.
Okay.
So if you are looking at prices over, and that's the loan amount, so obviously purchase price can be higher than that. You would just have to,
Right.
you can only finance the 356. So if you are looking at higher purchase prices, then FHA wouldn't be an option for you.
Got it. Okay.
Okay. One of the things that I like to point out, because a big thing that used to be the factor between FHA, conventional, or even USDA, FHA used to require that we charged a higher percentage on student loans. Within the last week, maybe 2 weeks now, they have updated that, and they will allow us to use a certain percentage or the actual payment that someone is paying on their, that shows up on their credit report. So before, if someone was doing like income based and only paying $50 a month, we couldn't use that payment. We had to hit them with a higher amount. FHA has updated their guidelines here within the last few weeks that will allow us to use a lesser amount on student loans, which helps significantly with qualifying for an FHA
Okay,
loan.
wait. So say this again. So you have student loans and you're paying on those loans, and that amount is helping dictate what you would pay for on your FHA?
Yeah, so and student loans could probably be a topic for we could do a whole Finance Friday on student loans, because it's a whole thing, especially right now we're running into it a little bit more because of the CARES Act, and with COVID, everybody's student loans are, if they're paying federal student loans, they're in deferment. So no one's actually making payments on those. They could still be making payments, but they're not required to right now. So when we pull credit, the payment that pulls it on the credit report is typically $0 a month. We can't use zero for qualifying, because we know eventually someone's going to have to make a payment on those student loans.
Yeah.
So every loan program has a requirement for how much you have to pay or how much we have to count for qualifying purposes on a student loan. So you might not actually be paying $100, but if that's a certain percentage we have to count, that's what we have to count in your debt to income ratio.
I see.
So FHA used to require that we counted a higher percentage. They just, within the last few weeks, have now matched like USDA, conventional, things like that, where we can use a lesser percentage. So those student loans used to be a huge factor where someone might not be able to qualify for an FHA loan that now can. I have someone who, we were having a tough time qualifying them because they had to go conventional because of student loans and things like that. They now have the option to go FHA, and everything looks a lot better for them because of
Wow. Okay. So basically that payment amount is what's factored into the debt to income ratio, not necessarily the total amount of the student loan, right?
Yeah. So if you're in the process of getting pre-approved and someone's told you can't qualify because of student loans, reach back out to your lender or give me a call, because that guideline has changed here recently, and it may be the difference of you not being able to qualify before and being able to qualify now.
Yeah, there's very few things that make me sad in life, but my student loans make me so sad.
Yes, student loans, we wish we could just ignore them. Unfortunately, we can't from the finance side of things, but thankfully FHA has kind of gotten in line there and made it a little bit easier on people.
Cool, that's awesome. Okay, good to know.
Kind of a little, we got off track a little bit about student loans. Like I said, we could talk about student loans and how every loan program looks at them. But that just happened here recently. So I wanted to point that out about FHA. That makes it a lot nicer on an FHA loan.
Yeah, that's awesome. Okay, cool. So FHA, not just for first-time home buyers, it does have a limit. You said $356,000 for a purchase price. But definitely a great option for, if your credit is lower or you have less cash for a down payment, right?
Yeah. So like I said, it's geared towards lower down people that have less money for a down payment, plus possibly some credit issues in the past. If you filed bankruptcy, things like that, the waiting periods are a lot more lenient. So it's geared towards people establishing credit or reestablishing credit and less of a down payment. So that's going to be a good fit for those types of borrowers.
Awesome. Okay, cool. I think that's all for FHA, right?
Yeah, I think that's pretty good. Obviously, getting into specific things, if you have any questions about anything specific, I'm happy to answer. But general questions and guidelines about FHA, I think that covers it.
Awesome. All right, cool. Well, I'm Haley Jones. I'm a real estate agent based out of Knoxville, Tennessee.
And I'm Shay Martin. I'm a mortgage loan originator also here in Knoxville, Tennessee.
And we will see